Hey, everybody. So, the topic of this week has definitely seemed to be defining your role as a bookkeeper and how you're able to explain that to your prospective clients. And sometimes we maybe even need to remind our current clients of what our role is if we need to put some parameters in place. So, I explained it earlier in the week, but I thought it was worth kind of going over again, trying to get my whiteboard here to pop up. But I thought it was worth going over it again. And essentially, what you're trying to do is you're trying to give them a visual to help them to understand that there are all of these different activities that happen in their business, and it is really, really difficult for them to use just a spreadsheet to be able to track all of those things. So let's do this. I think that's supposed to give us a Post-it note. Um, let's try it again. So funny. It's funny. I test things out and they work when I'm not on camera, and then when I go to add them when I'm on camera, of course they don't want to work. But essentially, what you are demonstrating to them is they have their we'll call it their checking account, and they have their savings account and and I'm doing them in different shapes on purpose. And then they have their credit card, right? Now, pretty simple still if they only have these three things. I mean, a client that has three accounts is kind of a dream. It's kind of a dream for us. But our objective as the bookkeeper is to take the information from all three of these different buckets, we'll call them, and to turn them into financial reports, right? And there's lots of different things that they can do with the financial reports. They can look at them and they can use them to determine, trends in their business. They can look at them to determine if there's things that they need to cut costs on. They can look at them to determine if there's been a price hike on things, because you'll notice that even some subscriptions, like the price just kind of creeps up a little bit here and there. But if you have those different subscriptions, and let's say there's 10 or 15 different subscriptions that a business has, and all of those subscriptions increase in price on 10 or 15%, that can have an impact to your client's bottom line. So you've got a checking account, you've got a savings account, you've got a credit card account. Pretty straightforward to explain to somebody, even if you were to just jot it down on paper, similar to this, that your job as the bookkeeper is to take all of the information from the activities that happened in the checking, savings, and credit card, determine what was true and what wasn't true. And when I say that, I mean, sometimes there are things that can go through a bank feed and they will cause duplicate or triplicate transactions. Sometimes if a client is just looking at the bank feed from their account and they're trying to determine from that, there may be some transactions that are missing. But where it becomes very interesting is when you're talking about the flow of money, right? So, maybe you have a client who, let's see, where are my arrows? So maybe you have a client who takes their money, and this is an excellent plan to build your savings for your business. And when they have income, of course, they keep a minimum amount in their checking account that they need to operate for just upcoming expenses that their business will have. So they take the money from the checking account and then they transfer that money to savings. Well, one of the issues that can happen with that is the money that is transferred from checking is considered, when it gets deposited into checking, that is and we're going to use this arrow as our arrow. So money, nope, the arrow didn't work. So money gets money gets deposited into checking, right? This is where it all starts. They get paid money, money gets deposited into checking. When they have, let's say their threshold, their minimum threshold, they're a solopreneur and they keep a minimum of $500 in there. So anytime they have more than $500 in that account, they transfer it to savings. But they also have credit card payments that they're making. So when they're using the uh, funds that come into their checking account, they're taking them and they're also using them to pay the credit card, right? So pretty obvious. Nobody's going to count a credit card payment double. But what I have seen happen is that they will count the expenses, the things that they're using their credit card for. They will count those as expenses on the credit card. So they're using their sheet that they're using to track things. Let's say they're using Excel. They use their credit card statement. They jot down those into their Excel spreadsheet. They think they're doing a great job, right? So they've been counted here, but they're also then counting the $1,000 payment or $500 payment or whatever it may be that happened from their credit card. They're counting that as an expense on the checking side, right? So they're doubling up on their expenses. And then they have their deposits that are going into their checking account. That's, of course, income. But then they're also counting the deposits that go into savings as income. So they're doubling up on income. Now, doubling up on income, that's of course going to cause more taxes for the business. Taxes that they don't need to pay. It inflates their numbers a lot. It can give them, if they're just keeping track of their finances on the back of a napkin, so to speak, it can give them an overly inflated view of what their business is actually doing. It can give your clients, as the business owner, it's false information, right? And the same thing that can happen with expenses. If their expenses are being duplicated, so if they're counting the payment out of the checking account and then counting the individual expenses off of the credit card, they are doubling up on their expenses. So if they were to look on paper, their business is doing, far worse, and they're wondering why they are, constantly feeling like they're behind the ball when their bottom line from their spreadsheet isn't reflecting what they're actually doing. Other reasons that our job as bookkeepers are important, if that was something that you needed to explain to somebody, would be that it is without a question, no joke, that fraud is on the rise, and that our checking account statements need to be checked and need to be reviewed on a regular basis. The quicker that you identify, or that your client is able to identify transactions that went through that weren't authorized to go through, the more likely they are to be able to get them resolved by their financial institution. Same, of course, would go with credit cards as well. Now, it has been in some cases, although it's not very often, where I'll see clients make transfers from their checking account to their savings account, and the money gets taken from the checking account but doesn't quite post to the savings account ever. Sometimes that's a banking error. And again, being timely is key with those things. So fraud and timeliness would be, two other kind of benefits to having somebody who's regularly looking at the books. But, the biggest benefit is just this kind of circle right here, this knowing that you're taking the accounts that your client uses for their business, you're able to review the transactions within these accounts, determine what is true, and then use all of the information from these sources to compile financial reports. Now, where it becomes, kind of more interesting is if you have a client that has multiple credit cards, right? So you have now all of these sources where they've got, gosh, we have some clients that have as many as, and I'm going to move these around a little bit more, but we have, some clients that have as many as maybe 9 or 10 credit cards that they use for their business. And there's certainly nothing wrong with that. They're probably all legitimate accounts. But at the same time, you're trying to, well, the arrow should actually go the other way, but you're trying to keep track of all of the information that is happening on, 4 credit cards, a checking account, and a savings account, and turn those all into financial reports. It's just not something that could be done very easily on a monthly or even annual basis by somebody if they were just using pen and paper, so to speak, or even an Excel spreadsheet. So one of the benefits that you bring to the table is the embracing of technology. You're showing them that they can, by utilizing, QuickBooks Online, that they're able to have their books simplified. They're able to stay on top of what their clients owe to them if they do carry balances for their clients or if they invoice clients, and you're able to keep an eye on those transactions that could be fraudulent so you could bring them to their attention. And then you're also able to see the patterns in their business. Now, next week, we'll be talking about budgets and the benefit that budgets can bring to your client's business, kind of another tool in your toolkit. But for this week, I just wanted to give you guys kind of a good visual on what it is that we do, bigger picture wise, and how that can benefit our clients. Hope you guys found this helpful. As always, if there's any questions at all, please do not hesitate to reach out. You can send me an email directly, or of course, you can direct message me through school. I check, of course, both my email and school messages on a daily basis and respond, or do my best, I should say, to respond on a daily basis. So if you've got questions, I want to hear them. Would love to have monthly one-on-one calls with everyone to keep you moving towards your goals, but thought this visual was important. See you all next week.